group has experienced a stronger second half as it reports a 7.8% growth in annual earnings, while the 55.5 billion rand in earnings before interest, tax, depreciation and amortization is down 1.1%. Performance in Egypt and Tanzania has been lauded. That says revenue for the year to end in March came in at 10.9% as service revenue growth rose by 11.2% to 120.7 billion rand. Headline earnings per share also 1.3% higher at 857 cents, and a final dividend of 335 cents per share has been declared. The group further added 8.2 million customers, representing a 4% increase. CEO Shameel Joosub speaks to us about these developments. Thank you so much for your time and patience, Shameel. Talk us through the highlights of this performance in the context of foreign currency fluctuation, hyperinflation accounting, and the effects of merger acquisitions and disposable activities.
Thank you, Demisang. So, I mean, we're very pleased with the results, given all the headwinds that we had in terms of the devaluation in March last year in Egypt, and then, of course, the devaluation in Ethiopia. So, coming out with a bit of growth in this year is very positive for us. And then, of course, the underlying growth being very strong, and I think that bodes well for the next horizon going into the future, and that's why we've taken, the move of upgrading guidance to double-digit service revenue and EBITDA growth for the next 5 years, and also strong, giving strong guidance on customer numbers that we get to 260 million by 2030, adding circa 10 million customers a year, and also fintech growing from 88 million to 120 million customers, adding about 6 million customers a year. So, I think a good trajectory going forward, and we are seeing a lot more stability in the currencies.
That's encouraging to hear, along with Egypt and Tanzania being lauded for such growth. But South Africa's performance is described as basically resilient and measured. Why is that? Is that we are not seeing the growth that we are seeing with the counterparts across the continent?
I think firstly, South Africa was impacted by a wholesale change in the renegotiation of contracts with our two big customers being Telkom and Cell C, and that had an impact of almost 2% on revenue growth. So that dampened revenue growth going forward, or just last year. Going forward, we see South Africa growing between 4% and 5%, so kind of keeping pace with inflation. It's a much more difficult market. It's more mature. It requires a lot more investment, but of course, it is a good business in our mothership, if you like. So, I think that's the part. But we've had to diversify revenue to get that better growth profile above inflation, and that's why we diversified firstly from a product perspective with financial services, both in South Africa and across the markets, and also with fiber and IoT and digital services. But that's going really well for us. But also the geographical expansion of adding Egypt and Ethiopia into the mix, and you can see now at operating profit level, 28% coming from Egypt.
It's an interesting mix, but speaking of the local market, the company's views then on Budget 3.0, what are the expectations this time around, given that the overall market has seen uncertainty in this regard?
Well, I think the big part is that, what we're hoping for is more stability and a clear plan that can harness more growth. The higher the GDP growth, of course, everybody in the economy benefits from it, and I think that really should be the essence of what we're hoping for in the budget. And that's going to come like any business. I think you've got to look at where's the areas you can incentivize growth, and I think if they took that approach, it would be better. And in other areas, where can you and then also encourage investment, right? So that's the one part. And then secondly, you need to look at where can you optimize your costs, and where can you use digitalization to bring more effectiveness in your cost base.
Let's also talk about another current matter, which is the U.S. and South Africa trade relations. We know that the president of South Africa, Cyril Ramaphosa, will be meeting with U.S. President Donald Trump this week. And I'm interested in finding out about uncertainties that may be on the side of big business, along with yourselves as Vodacom.
Yeah, I think the uncertainty is there. And I mean the narrative around South Africa is not good, and I think we're hopeful that President Ramaphosa will be able to negotiate a good way forward.
As a parting shot, Shameel, I cannot let you go without asking about progress in the Please Call Me case. Where does Vodacom stand there with the arguments that have been in court?
Well, we now all await the competition, the Constitutional Court judgment on the matter. So no more to be said. We wait for the outcome.
We'll leave it there. Thank you so much for your time. That's Shameel Joosub, the CEO at Vodacom, talking us through their latest results and other matters related to the business landscape currently.